it going, everyone? Fractality here. I just wanted to maybe start introducing a series. I've got an idea that I think might be helpful for other ICT students, other people getting into smart money trading. By the way, I can't stand that term, smart money trading. But I know that it's a marketing term, to be honest. And I think that, that general style of trading, it's definitely the way the market works, but you really have to have a lot of experience and know what you're looking for in order for it to work. And for those that don't know, I am an ICT charter student. I think I joined in 2020. I had been studying his stuff even before that, and I've been through the ringer in a sense. I've chased all kinds of different rabbit holes, and luckily, persistence paid off to the point where I now know what I'm looking for, and I hope to kind of help people along in their journey as well as they are doing, that discovery process. And so I figured maybe I'll start doing a series where people can maybe contact me on Twitter, and they can reach out and say, hey, I had trouble, I thought this setup was a breaker, I thought this setup was a order block and it failed. Why do you think this failed? Obviously, it's better if you do that yourself, but it's not always easy to find the answer, and sometimes you get the wrong answer, and then you go take another trade and it fails, and then you're just sad. Well, anyways, figured, let's do a video. So I saw this person did not ask for me to do this, but they made this post on Twitter asking, someone seeing something obvious here I missed on EU today? And then I saw a lot of other answers, people getting stopped out there as well. And so I thought we should maybe take a look at this, and I can explain. I gave an answer already, but I'll do it in video form. I can explain why this didn't work out, in my opinion. Well, to be honest, it's hard to say it's an opinion, because if you're trading ICT, there's really only one way to trade it. But that's a that's a topic for another day, perhaps. Anyways, alright, so this person was looking for, looks like pretty much the YouTube model with the run-on stops and a breaker and a fair value gap, all that usual stuff, right? So let's take a look at that piece of price action. Let's see if I can find it. He's on a 5-minute chart. Here we go, right? Yeah, okay. Alright, so I'll just mark out what they had. Here's the fair value gap, and here's the run on liquidity, and yeah, breaker, could be that, sure. Okay, breaker. Alright. Okay, so if you took this trade, I understand, okay, because I used to, for one, I might have gotten messed up here. I was bullish, but, if I weren't paying attention, didn't know what to look for, then maybe I would have shorted as well. But anyways, so I understand why people would take this short, and this is kind of an issue that I have with ICT. No disrespect, okay? He often will say, like, look for equal highs to be swept and use them as a draw, or short equal highs after a displacement. Okay, I'm gonna be honest with you guys. That terminology is too simplistic, and it's okay as a terminology, but it requires a great deal of context. And now he I'm sure, if he were listening, would say, okay, yeah, but I also say you need to know the draw on liquidity and you need to know the narrative. And that's what the context is. He's absolutely right. You do need to know that. But I think what trips up the newer traders is they think they can just go look for like equal highs, equal lows, you know, and take the breaker, right? Like you can say here, oh, equal lows, it rated and it worked. So why didn't this one work? You know, like it's perfectly logical, but that's too simplistic. It's far too simplistic, and the market's more complicated than that. Okay, so let's talk about why this didn't play out. Okay, so let's see, I'll leave it there, and I'll go to the daily chart. So, whoa, let me just clear that. Okay, all right, so we have to go to the daily chart, right? And we kind of have to look at all of this. And so you wanna kind of get a narrative in your mind about what the market's doing. How do I get rid of this? There we go. Okay. So lately, if we look to the left, first we can look to the left. We see old daily low here. That's gonna be important. These high time frame, I mean, technically this is a weekly low, right? It's better than daily, right? So you got an old weekly low back here. You got another daily low here. We recently, okay, yeah. So those are were the most recent ones, right? And so Euro's obviously really heavy for sure. It's bearish, right? And so it's going to reach for these lows. And then it managed to hit this one. Okay, so that's what could have existed in terms of downside objectives for the week. Like we could have kept going, but we managed to stop there. So one thing to keep in mind is like, yeah, you might say to yourself, yeah, we're really bearish. We're gonna reach for these lows down here. Yeah, sure, we're gonna reach for them one at a time. Okay, we won't always go like, you know, all at once, right? It's enough to just hit one, like hitting one old daily or weekly level is enough to cause a retracement, right? Just because they're close to each other doesn't mean that you need to hit both, right? And that's something that you don't really think about, right? But then if you go to, it's kind of the same thing as this. Like if you zoom in on this price action on Thursday, right? We didn't hit this low. We hit all these lows here, but that was enough to turn price around, right? Amongst other things. So, yeah, okay. So we hit a significant level, okay? And so I'm just gonna get rid of this one, okay? So that we can keep things clean. Right, so, yeah, so it's been very heavy throughout the week. Something else to keep in mind is the fact that this has just been expanding aggressively without any sort of retracements, right? And so whenever you see that, you know, the market needs to retrace. Like it doesn't always retrace. Usually you'll see it doesn't retrace whenever the price range is like balanced that it's left. You can look into that yourself, but generally speaking, if it's got these extended moves, they're going to need to retrace a bit, okay? They don't have to, and it's going to depend on where you are in the market maker model, but I'm not going to get into that because we'll be here all day. So just look into price grades is what I would say. I'm not going to answer that right now. Okay, so the question is, back to the question, right? Why did this short not play out? Okay, so like I said, you need to look where the market's been. It's been descending rapidly, heavily, whatever. We hit a key level. We didn't bounce off of it immediately, right? That's fine, whatever. Something else to keep in mind, which I only just now saw this, and I was just thinking to myself, I wonder if this is an institutional level or not. Yeah, it is. This is 1.05. Okay, that is gonna be 1.0500. Sorry. that's gonna act as an institutional level, right? These big zero levels can be, they can be support if you have price action confluence around them. So that's something to keep in mind. So we've got reasons. We have valid reasons. Okay, this is the point. We have valid reasons for the market to make a short-term reversal. Okay, specifically daily key level, and the institutional one is like a nice confluence, but I don't usually use them that much, to be honest. Okay, so we have a valid level, and then we do begin a reversal. Okay, so what you're gonna want to do is you're gonna need to learn the difference visually between a retracement and a reversal, and it's gonna be fractal and it's gonna be time frame dependent. But let's say you have expansions. Okay, all of these moves are retracements, right? All these moves, and so it takes out liquidity, it goes lower. Eventually what you'll see is it's gonna start pushing like higher and taking out the highs, as well as this this old high here that led to a break in market structure. Okay, and that's really important. Now if you're good, like if you know where your key level is, you can kind of watch for this second like shift here. Like I would classify this break as a shift because it hasn't taken the old high that led to the break further. If you're good, or if you have confluence in other markets with intermarket relationships, you can start to say, okay, we're bullish from here. Or what I like to do is I say, okay, this is a bit too strong for me to be shorting. I need this to basically break again, and then I'll take a retracement and go lower. That's a really good way to do it. But yeah, so the point was you want to learn to spot the difference between a retracement and a reversal. So in my opinion, we've got expansion into key level, and then we start breaking higher, and we're breaking highs. At that point, I don't want to be shorting, okay? I don't want to be shorting because we've kind of rounded the market maker curve, if you can see it that way. If I'm still bearish, I'll wait, like I said, for a real break of something that broke the highs. So what that means is we're going up, we're breaking highs, and then I would want to see us take out, levels that broke highs. Now I know what you're gonna say, right? Possibly someone's sitting there thinking, oh, but it broke this low that led to a high. That's not, significant enough, because all we're doing is sort of look at it in terms of expansions. We've got an expansion up, right? So this is, I would see it more like this, and then this is just a retracement into that expansion to potentially go higher, right? So you want to think of where is the low, or where is the origin of the expansion as well, right? So if this here had broken kind of the origin of the expansion, which is like arguably this level or this level, then we would be bearish again. Okay, all right. So that's a few tips for you to kind of investigate yourself. By the way, I'm just giving the tips and giving the way I look at it. You're gonna have to investigate the shit out of all of this. Like, I can't just give you a rule. And to be honest, like, as much as I want trading to be completely mechanical, some of these things are gonna just come with experience and kind of hours upon hours in the chart. Okay. All right. So the other thing is, you'll notice that sometimes that these big expansions that just keep on going like that, they're gonna need to retrace. And when they retrace, they'll take out some of these short-term lows, okay? That's not a break in market structure, okay? You shouldn't see that. Like, that's not enough. Like I said earlier, this is more like a shift, but if I've got an unretraced expansion, like this, right? This here never came to 50%, right? If that exists and there's short-term lows, I always expect this to retrace back to that level, and then I'm looking for strength to go long again. Okay. All right. So let's go to 5-minute chart. So this is the price action we're looking at. So here in this case, if we just go from London, right? We took out the daily low. We formed like a potential kind of reversal range, right? Expansion up. Now you might say, hey, isn't that just the retracement? Yes, you're right. Price could have retraced like this and kept going, but it didn't. Okay. So this is like this area in trading it's a risky place to trade, right? We've already hit an objective. You really need to know what you're doing to trade this, basically. Okay, so but regardless, this is our expansion upwards, and then what happens? We confirm this sort of short-term reversal with further upside. Okay, so at that point, we're bullish. It's just plain and simple, we're bullish, and we're not looking at stuff over here to get short. Like I used to make this mistake all the time. I think a lot of people make this mistake. They'll look at this as like, yeah, let me do a premium discount here. They'll look at this expansion, right, with all these highs and lows, and they'll be looking for order blocks over here and fair value gaps to get short off of. Okay, those are not places to get. That's not how it works. Okay. The market goes like this: bearish, bearish, reversal, bullish, bullish, bullish. Sorry, this is a horrible drawing. You want to be shorting kind of the most recent ranges, right? The arrays, the levels inside of these most recent ranges. You want to be longing the most recent range levels, right? You don't want to be shorting the previous ranges stuff, okay? All right. It's, again, investigate it, basically. I can't make it super obvious. Okay, so the person asked me why did my short fail? They didn't ask me, they just asked. Okay. And what I'm looking at when I see this is, well, what do we have here? Let's zoom in a little more. We have expansion. So something with expansion, that it can expand like this, and this whole thing is an expansion, okay? Like, just because it has a down move doesn't mean like, oh, this is like 3 expansions, right? Although technically speaking, it kind of is. They kind of like link together. I guess you could see it that way. So anyways, we have expansion, expansion, expansion. No retracements hardly back to 50%, right? Until this happens. And now the market has expanded and now it has retraced, okay? This is not a reversal. Because what did we say? I don't know if we said this or not, but basically, in order for a reversal to happen, you need to hit a key level. And now, this is something even I'm logging and I'm still investigating to kind of give myself a library of what can I consider a valid key level for a reversal. Okay, so, but I can definitely tell you that, looking at day of the week, Wednesday, New York, we hit that key level, plus intermarket analysis, so what were other markets doing? This seems like a valid place for a reversal, short-term reversal, okay? So using that logic, what if you want to short this here, and you're considering that this run up, and basically price right now is bullish, that means in order to short this, or to short the reaction, or whatever, after it breaks, something over here needs to be a significant key level. Well, is it? Let's take a look. Is there anything over there that I could feasibly use? First off, there's nothing on daily because it's the previous day. We have a 4-hour fair value gap right here, which looks like that is what it reached. But these levels, price will reach into arrays and use them as short-term resistance. Michael talks about this as well, but they're not reversal levels, right? They're not significant enough. But I guess that's not fair to say, if I'm being honest, because technically a reversal could come off of this. But what you would need to see is an actual break in market structure. And because we are retracing into an expansion, right? Because we're retracing to an expansion that has not seen a retracement, it's not safe to assume that this is a break in market structure, because expansions need retracements, okay? So that alone, retracing into an expansion, even if it breaks short-term structure, is not enough. Even if you have a key level here, right? Sorry. Even if you have a key level here, what I would say is enough would be, okay, expansion into key level, like I said earlier, break this low that led to that move up there. Now you might be saying, well, it's moved so far already. Yeah, okay. you can't pick tops like and bottoms. Like, no, you can't. Like, you can't do that while having an edge. And so then what you would just do is you would say, okay, we've broken this. Okay, great. This is a great place to short, right? And then that's probably what you're going to get. Not every time, but often enough. Okay, so in this case, we expanded and retraced. We needed to retrace. So it's really not safe to be looking for shorts there. Basically because of all of that, and because this isn't a significant enough key level. So let's look at something else, right? Let's look at where the market did reverse from. So what I told this person, let's see, what did I say on Twitter? You got tricked by a retracement. Study it. Happens all the time. So that's what I'm talking about. Expansions need to retrace. And I get tricked. It happens to me. But yeah, I also said go down the time frame. So I wanted to tell him, like, hey, actually that's a long setup. You thought it was a short, but if you want to trade the continuation off the retracement, let's look at it this way. Before I keep going, here's your consolidation. Yes, this is consolidation. Price is stuck in a range. This is consolidation. Into what? Into expansion. Into what? Into retracement. What's going to come after a retracement? It's going to expand. It's either going to consolidate or it's going to expand again. Now that's core content. Go study core content month 1. Okay? So you have to consider this context. And the other thing is what? What is this? Is this support resistance actually working? Yeah, it is, because price came back to consolidation. It's going to find support there, somewhere in the consolidation. But because it was so far gone, we really only needed the fair value, which is 50% and lower of this expansion. Okay, so if your mindset is, hey, and this was my mindset on this day on Euro, hey, we're short-term, we've reversed short-term, we're short-term bullish, we recently hit a daily low, we need to hit a significant enough objective to turn price around again. And I should say this is a weekly low. And so I would be looking for daily levels, right? So we had, here we go. We had a daily fair value gap, right? That's going to be important. Price is going to want to reach into that after it's hit a significant level and given you price action that indicates it's short-term reversing. So that's an appropriate level. Yeah. I was going to say, this order block up here at the top of this expansion is an okay level, but we didn't really get any reaction off of it. So you can just watch these levels. I prefer the daily one. I mean, this is hindsight, so it's not really fair to say, but anyways, I was watching Euro, right? I was watching Euro on this day, and I was saying, okay, maybe it'll turn here. No, maybe it'll turn here. And so yeah, sometimes you just have to watch. So what I was saying, I don't remember what I was saying before that, but I wanted to talk about the continuation move. So when I saw the person's chart, they said, oh, why did my breaker setup fail? And then I was like, oh, there's actually a breaker setup to go long. If you just go down to the 1 minute, okay, you have your expansion, you have your retracement. Okay, let's label this. Let's make it easy on ourselves. Okay, you got expansion. You got retracement. There you go. Okay. And so, what key level did we hit in the retracement? What would I use? Okay. I just went through the time frames looking for basically something at 50% or lower. We got a 30-minute fair value gap here. Okay. So there's also order blocks, but we'll, it's the combination of the two. So price retraced into discount, fair value gap. Let's go down to the low time frames and let's see if the market gives us structure to indicate that this is going to be support for continuation. Okay, well, what do you see? Price comes down and it starts to retrace. This move here, this push up is not something to get excited about until you see a real break in structure. So, because the only swing high we have before this next move was up here, I couldn't have really looked to get long unless it had formed, some more swing highs and started breaking them. So it's not so great. So we have to wait. So we push down and then we break lower again. Okay, so I'm sure some of you already see this. This is a rate on stops and a key level followed by a break in market structure, right? Okay. And the market structure, this is really important, guys. The market structure is breaking in the direction of the overall move. So this is the overall direction for this expansion. Now we have alignment between your time frames, between order flow. Okay? We break the market structure here. Now it's a decent long. Okay? So and so you can use the breaker. Oh god. So this is a breaker, right? Because, God, I'm gonna sound like Michael now. You got low, high, lower, low, higher, high. Okay, this is now gonna be used for mitigation. And so this provides support. And now look here, this is really good. This is actually worth gold. In this situation, because of the way liquidity works, which is internal to external, external to internal, not exactly like that every time, but generally speaking, if you have an expansion to a retracement, you want to see this internal liquidity delivered to external liquidity, and I've talked about that before. But because we have the bullish market structure and we have obvious respect, right? Obvious respect of the breaker, and we have not reached the external level yet. That next retracement is what we call free money. This is what we love to see, and to be quite fair, like this could be a whole model, right? And this is the free money model. Now you won't always get this retracement. And why is it free money? Because we have not reached the objective. Like the odds that we should reach this external level are quite, well, I don't know what the odds are because I haven't done statistical analysis. I've just seen it enough times. I know that this is how the market delivers because it's fractal. But anyways, because we haven't reached that, we're definitely still bullish. We've broken lots of structure. This right here is your, I don't know, this is your OTE, right? This is, you want to be buying this. You want to buy this order block, okay? By the way, look at the sensitivity there. Anyways, and so get this, okay? This move, you want to talk about fractal nature. This expansion here is the same as the overall fractal. It's this big extended move that hasn't retraced. They got to bring it back down to 50% or less before they can continue. It's the same as this big move. They got to retrace. Okay, so that's why you can't just randomly pick market structure breaks and use that for direction. You have to nest your time frames. And I mean, really, I just encourage you to go look and see where it works. Okay, so this is free money. And what I was going to say is, let's go look at an example of a reversal that actually worked. Okay, so I'm going to get rid of all this. All right. So I was saying, here's your daily level, daily fair value gap. Okay, DFVG. And let's go take a look at, okay, so basically we had a weekly low, we retraced to a daily high. This is in core content month 7, I think. He talks about that, the nature for IPTA to go from weekly to daily, from daily to 4 hour, whatever. It's complicated, but it's important. So we weekly low, daily high. So this level here is valid for reversal. Okay, but the way we trade reversals is going to be different than it's just different. It's unique, right? It's different. I don't know what I'm saying. It's unique. So what you want to see with a reversal, in order to not get yourself in trouble, you want to see price move into a key level, and you don't just want like a baby market structure shift. Like what you really want is expansion, right? And then you want to see price retracing and then continuing the break, and then we can go lower, right? Like you really want the market structure on your side, because now you're trading against this bigger expansion, and you don't want to get yourself into the trouble that you got yourself into here, right? This was just expansion up and a little retracement. You know, that's not enough. Yeah, you could have scalped it if you're like a literal god, but I don't know. I only know a couple people that could do that. All right, so what I was saying is you want to see this real break in market structure. So we have to move up, and then we have a break. Let's go down to the 5 minute because it doesn't look like much on 15. Okay. Here you can see it's looking good. So, so we have the push up, we have a low, and then we push up again. What did I say before? I want to see us take out this low with expansion before I can kind of trust that we might be in a short-term reversal, right? So we took out the low that led to the new high. That's a good sign. And so I'm going to be hunting shorts inside of this potential retracement, right? And if I don't get what I want, I'm going to be scared because we might continue, right? So that's why it's hard to do reversals, but you can do it for sure. So we get an expansion lower, we get a return to the order block. What the fuck? Rotated rectangle. Some retail shit. Alright, so here's your order block. Okay, we break this market structure here. Break in market structure. And again, this is the low that led to the high. Right? And so let's go down to, alright, so basically, you know, at this point you could take this short with a loose stop, targeting whatever the low and some of these lows, but you can also go down to the lower time frame as well. And so this gets kind of funky, right? There was some news here, and for me, like, I'm gonna be honest, I would be interested in the short here, but once we delivered to this downside objective, you know, it gets a little bit funky. So perhaps a better short, well, there's not really a better short because we go into London close, and I mean, you could say that, like, technically speaking, if time was on our side and we weren't like ending the day, because this gets really choppy, this OTE retracement here is a much better short than shorting up here. Shorting up here is kind of for the chads, and I mean, I shouldn't say that because everybody wants to be like the chad trader. You know, really, like, this is the better short for a reversal trade, but it's still a good trade, right? And now, yeah, it looks a lot better on the 5 minute, right? So you get this return to the order block, and then the following expansion gets a return to the fair value gap. This is a much better short. It's safer. You know, you can figure out the risk stop placements and stuff if you want. Like, I guess if we go into the 1 minute, I mean, it's going to be dependent on how you trade, but you can see that there's a clear breaker here, and it holds price beautifully. So, and then where do we end up delivering? I would be more interested in just getting out here, but we do make it to the external level. And time is just not on our side. There's a lot of delay here with the delivery. But anyways, so hopefully that cleared a little bit up. There's not, there's a lot, I don't know, I could go in depth into all the things I just talked about, but I would say the main points are, if you're looking for a reversal, you need that significant key level, not just a one, nothing in here, nothing in the left side of the curve, right? Just don't do that. That's risky. But you know, you want to see that push up into the key level, and then you want to see it breaking the low that made the high, and then you want to kind of look inside of this market structure and here for continuation plays. But yeah, I hope that helps. Yeah, so if you have any questions, just at me on Twitter. It's FractalityX, and just ask, you know, if you have any questions about market structure or any issues, things that trip you up. I want to help people in their studies. I do not want to teach or give answers. You know, I want to help people that are doing the work. That's what I'm trying to say. So if you're, you know, if you're doing the work but you're finding stumbling blocks,